Hello, folks. It's James again with the CSC, and I'm a top first Canadian place, and this is #finance. And today I'm with a very special guest. I know I say this a lot, but I've actually been trying to get this guest for a long time. Ian Mclelland, the founder of Proactive Investors. Ian, thanks for joining us today.
Thanks for having me on.
Now, Ian's a tough guy to get a hold of because he's running a company that spans several continents. He's running a multimedia empire at Proactive Investors, and maybe just tell me where you were the past week or 2 weeks, Ian.
Sure. I was in London. That's a quarterly trip for me. And then I took that brand new flight that goes London direct to Perth.
Oh, wow.
So I was in Perth for a week and then back to New York, back here, back to New York tonight. But I do want to compare notes with Richard on his air miles, see who's got more, because I see him a lot traveling as well.
Yeah, I guess there's a little subculture of people that run into each other at Air Canada lounges.
Lounges, yes.
Yeah, globally. And Richard Carlton, CEO of the CSC, is a frequent traveler. We've been running him on the Canadian hamster wheel recently. But for you, you're running a company that has a presence in multiple continents, and we'll talk about that in a minute. But maybe just for the listeners who don't know Proactive Investors, give us a sense of what your company does, what the origin story is of Proactive, and what you guys are really focusing on today.
Yeah, absolutely. So I guess I'll start with the origin story. I feel like this is they're going to make a Marvel movie
it's
about
like
me
sometime. It's like a superhero
sometime.
comic book thing, which we've talked about comics in the past. So this is a good. You can put yourself in the.
We still got to talk about Star Wars. We haven't talked about Star Wars in a while, but the origin of the business is 2005 really. So 2005. I'm Canadian, but I was living in the UK at the time. I was a retail trader. I was your atypical trader. Mm-hmm. Had an account with Canaccord in Canada, had an account with a broker in the UK, had an account with a broker in Australia, and I was buying a lot of small private placements, and I was also trading on the side, making a living. So I did that for around 5 years, and it was good, but it's also very stressful, and it's a 24-hour day job when you're trading, because every day when the market's closed, if you have a position open that you don't want open, you don't sleep that night. So after 5 years of doing that, I was looking for something else to do. I always had a blog that I ran in the UK, and it was me just dumping my angst about certain positions I had.
Yeah.
And I decided to see if there was something I could do with that. And then I spent really from 2005 to 2007 trying to understand, how do you make money from a blog? And the answer was this business. So it was developing a service for small companies that really is taking the blog to another level, which is, I call it a news business. So we are very much like a Bloomberg for small companies. So very much driven by real-time content, lots of real-time content. And it really started from there. Mm-hmm. And it was quite interesting. 2007, 2008 to start a business.
Yeah.
Everyone else was blowing up, and we were just getting going. So in a weird way, that was good for us, because a lot of the groups that we probably would have had to compete much harder against were in all kinds of financial trouble, just because generally what was going on in stock markets at the time.
Were these other companies media companies? Financial News Corp? Okay.
They were, but they were more in the, that it was at the same time you had that kind of 2000 to 2010 was the end of print media in a lot of ways as well. Mm-hmm. So you had 2008 was the death knell for a lot of companies who were already having problems about how do we move from a legacy print business to digital?
Yeah.
How do we generate the same kind of revenues? The subscriber model has been dying slowly for a long, long time. Probably has bottomed now and is kind of like gotten to as low as it's going to get. And, groups like Global Mail have definitely figured out a way to make money.
Yeah.
So we were kind of fortuitous that we were an online-only business at the same time that print was in trouble. And a lot of the service providers that were providing smaller companies were in trouble just because of the general state of the market.
Right.
So back then, when I started the business, I was looking at, there were groups like Aspermont, which is still around, but, was heavily a print business and was having to restructure. So we were looking at that model, just digital. And from that, that's how we came with Proactive, and really wanted to focus on that real-time news. And have continued to focess on that.
So how many daily stories were you guys posting back then versus now?
Back then, it was funny because I didn't have any background in journalism, and English was actually my worst subject.
Yeah.
And I was writing articles on a daily basis and having to hire a journalist to clean them up.
Yeah.
So back then, we started with one journalist who came over from Reuters. Now we're around 40 journalists. So back then, maybe 10 pieces of content a day. Now we produce 300 to 500 pieces of content a week.
Yeah,
is the level we're at. Yeah.
And your goal, your content goal every day when you go to your editors is what? What are you guys trying to produce for your clients and for the end reader?
Yeah, I think the biggest thing for us has always been that now that's dwarfed now into video as well. So we do video production as well. But with both those products, written or rich media, the goal now and always has been to get it out to the market as quick as possible. Mm-hmm. And that's from my background as an investor. Even if you're an investor in a small company, they put out a press release at 7 a.m. PST. Yeah. You want to see something in the market about that, commentary about that, whether it's, any news organization really, but you're looking for something out there to give you some sort of direction on what that meant to the company. So for us, it's as soon as a company puts out a news release, we're on it, and we want something published on it within 60 minutes.
Interesting.
Yeah.
Okay, and you talked about video. So, obviously, video online 12 years ago, almost now, wasn't what it is today. I mean, you almost can't survive without having video. And I guess back again, just bridging that gap from 12 years ago to today was, you would go to a broadcaster and you would watch most of your business content that was video on a cable channel. And now today, obviously you guys do it and lots of other people do it, and we're doing it here. Video is a very sticky way of putting content out. It's very engaging. And I think that when I see what you guys are doing in that high volume, but also with some quality, what you've done is actually brought broadcast quality to the online video experience. You've hired people like Steve Darling, who, those who don't know, used to be the news anchor, I think 6 o'clock news.
It was morning. He was the morning show.
Was it morning?
Yeah, that was his his claim to fame. Largest claim to fame was the morning show in Vancouver.
Yeah. But you're bringing that experience of having basically, someone like a Steve running these interviews. Maybe just tell me your thinking around where you guys think you were at vis-a-vis the broadcast and what you guys offer. That's actually an evolution of what they're currently doing. Because, and again, this is a long question, but my perspective is on broadcast news, you only have really 8 hours of valuable time. Everything before the market and after the market sort of diminished attention because people move their viewing elsewhere. And there's not enough time in that 8 hours to cover all the news that's happening in the business world, let alone the small cap world and the stock market. So again, just to kind of tell me what your thoughts are when you're competing for eyeballs versus the BNNs of the world.
Yeah, it's a really good point. So I think, it's with video, and we are like that. It's the same with our written model and our broadcasts. There's an underlying, kind of company attitude towards everything we do, which is we want everything to be produced in a, we definitely look at Bloomberg as the standard for financial reporting globally. And we've always looked at that model and said, look, how do you do that for smaller companies who, are all over the shop on quality, and where they are in their life cycle and the ups and downs, and they're generally undercapitalized companies as well, so they're high risk. Right. But how do you bring that same standard of quality to that end of the market, so to speak? And that's what we've always worked on. With the video, it's the same thing. It's that it's got to be a certain standard. And Steve Darling's a good example of that. We want to recruit really good broadcast journalists who understand broadcast, understand on camera, and really can have that relationship and rapport with the person. Just like we're doing right now, it's the same. That's really important to us. I think it comes across in the interview. And look, I think the biggest thing for video for me is that, if you were an investor 15 years ago and you were interested in buying a stock, you found a way to get in front of the CEO and look him in the face. And a lot of it comes down, do I trust this guy? Do I believe in him? Do I think he can deliver? Right. Irrespective of what the news flow is. And I think video really helps empower that a lot more. You can reach a lot more investors through video who may be interested in reading the articles, maybe they're interested in following the stock, but a lot of the decisions they can be on that interview. And, do I like this guy? Do I think this CEO is believable? I think the flip side as well is for your current shareholder register, keeping them on the register, right? That interaction on video helps a lot with that. So that's really, really important. I think it's a big, big part of it. And I think it's got to be of a certain standard and a certain size, and it needs to come across as a legitimate product. That's the way we look at it. As far as eyeballs and how that works when you're comparing against, the TV channels on this, I think TV channels, the way they report eyeballs is very, very different from how you report it digitally.
Yeah.
So when we report readership on a video, it's an absolute number of absolute unique visitors who came in and looked at a video. It's not the total general audience who happened to have the channel turned on that day. And that's always been, the difficulty in how do you gauge value of a cable news type of product versus a pure digital product. Is digital products give you a lot more granularity. But with that granularity comes, you're not going to have 100,000 people watching a video. Whereas when you're on a broadcast network, you could say you could potentially reach 100,000, but they'll never be able to tell you exactly how many looked at it.
Okay. Yeah, no, fair enough. And then when you look at demographics, do you have any insights as to who's coming online versus what you would have seen 10 years ago? Is there an evolution?
There is. I think, if you look at it just generally, it's getting younger.
Yep.
And younger by, the typical atypical investor in a lot of smaller companies is an older white male, definitely. But when you look at it on the video, if we look at a video versus a written article, the demographic's younger. They tend to be on their mobile device, and they tend to be in transit. So we see the kind of hot pockets of readership come in during transit and lunch breaks, those types of times of the day. Yeah, that's when it's busiest. It's definitely we can track all that. You can see all that. So you can tell someone's on a mobile device, and you can tell what they're consuming, and they definitely prefer to watch and listen than read when they're on a mobile device. And, 10 years ago, I don't know, 20% of our traffic probably came from mobile, and now it's about 55%.
Yeah, we've seen it with our own content. The shift to mobile is undeniable. It's that's why podcasts are something we focused on, but also video, short videos. Like we don't tend to put out a lot of other than these interviews, which are there to consume on video. But typically, anything else that we shoot, maybe 2-3 minutes max, just because people want to.
We definitely see that. If you do a video, really when it gets over 4 to 4.5 minutes, the readership really starts to drop.
Yeah,
that's when people's attention spans start to run out.
Okay, cool.
Yeah.
Ian, we'll be right back with you. We're going to take a quick message from our sponsors, and we'll be right back.
Public Entrepreneur Magazine chronicles a bold and exciting new chapter in the Canadian Securities Exchange story. With over 500 public companies and share turnover measured in the billions, we're proud of our reputation as the exchange for entrepreneurs. Public Entrepreneur Magazine gets you up close and personal with a focus on topical stories and interviews with the charismatic entrepreneurs that make things happen. If you haven't already subscribed, be sure to get your free copy available on thecse.com.
And we're back with Ian Mclelland from Proactive Investors. Ian, as we kicked off this discussion, you're talking about your air miles and all the, flights you've been taking. Now, I expect there's a reason why you guys have set a footprint globally across Perth. Is that where your Australian office is?
Perth and Sydney.
Yeah, Perth, Sydney, and then obviously London, Toronto, New York. Anywhere else I'm missing?
Vancouver.
Oh, yes, right. Yeah. Of course. Tell me sort of why it's important to have that global footprint. I mean, not all of your, not all of the companies in your space do. Usually it's just New York or maybe East Coast, West Coast. But you guys decided to invest in a global footprint. Why is that important for you?
I think it was really important for us because one of the things we noticed really early on is that the vast majority of the products that are available in the market to publicly listed companies are very regional.
Yeah.
And your share register is not regional. Your share register tends to have a wide variety of people on it, different parts of the life cycle of companies. Most Vancouver-based companies start there, and they will be raising money immediately out of other provinces. Next natural step for most Canadian companies is they go to the U.S. Next step is probably the U.K. Australia is the same. Australian companies will tap the markets in Australia first, then they go to London. So having that international reach we thought was really important for really differentiating our product against pretty much everything else we come up against, is we really do have that international optionality. And like Richard and me, CEOs spend a lot of time on the road. And a lot of times when they're on the road, that's when their press releases are also coming out. So having the ability for a Perth-based company to know that they can come in and do an interview while they're in London, or a New York-based company to do it in London, or a Vancouver company to do it in Toronto, that's a big part of what we do. And I think it's one of the big things that a lot of our clients comment on quite frequently is that access to 6 broadcast studios globally, 24 hours a day. There's no additional charge for that. It doesn't matter where they're listed in the world, they can access that. It's a big selling point for us.
Now, do you have any insights as to how the audiences need to be catered to differently in different geographic regions? So like, does a UK investor look at a small cap stock differently than a Canadian or a American?
They do. I think, there's it's a sector as well that they follow. U.S. investors have a very high understanding of biotech, medical tech, technology companies. They have less strong understanding of mining. They're fascinated by cannabis. And they're pretty good on oil and gas. If you look at the London market, they have very limited understanding of the cannabis space, but fascinated. Very, very strong understanding of mining and extremely high interest in oil and gas. So you see every market's got different sectors that they like and different things they understand. And other than that, I'd say, I would say the readership in each market, there is different appetite. I think, just generally speaking, London investors prefer... if you look at mining companies, for example, I think Vancouver, Toronto, Perth, and Sydney really understand exploration companies.
Yeah, right. Yeah.
And they're very open-minded to geographically where those companies are. But, I would say Canadian investors prefer companies that are either in Canada, maybe Europe, South America, definitely. Australian investors are far more open-minded about Asia as a destination. So companies with like Lithium Korea, things like that, they will absolutely look at. UK investors have an absolute strong affinity for Africa. Yeah. So you see that as well. I always say there's a time zone thing there.
There
what's
is.
in your time zone.
There's just business that goes through those cities that is more familiar to those people, I'd assume. So in London, there's a lot of interconnectedness to the African and Africa, and then as you say, in the South Asia, Australia,
it's a perception of risk too is quite different.
Yeah.
A London investor's perception of risk of a West African gold producer is very different from the perception of risk that would be from a similar investor who appears to have a similar risk appetite if he was in Canada. He would be far more interested in a similar asset in South America or Nevada, for example.
Yeah, that's why there isn't one just big global exchange. There's just culture and history that make some markets just more suitable, and it's again, you can go back in history and see why maybe some of these things are as
Absolutely.
you say.
Yeah.
Okay, so and again, do you see any consumption habits changing from a geographic? So, for instance, is someone again in Canada like video more than text, or UK like text more than video? Are you able to track that or see that?
We are able to see that, and I would say at the moment the Australian market is still more comfortable with text-based content.
Yeah.
They definitely are interested in the video-based content, but you don't see quite the same pull down as you would see in other markets.
Yeah.
I think London, it's kind of even keel. It's kind of 50-50, and then if you look at North America, it's more interested in the video than they are the text.
Right.
Yeah.
Interesting. And okay, so now looking forward, what are you guys, in your own mind, what are you guys trying to do to continue to evolve how you are finding investors on your platform, bringing investors onto your platform? What sort of trends or even technologies, for that matter, would you be looking to employ to continue to bring people into your ecosystem?
Yeah, so something we work on all the time. So we relaunched the websites around 6 months ago now.
Yep.
And those new websites were designed to be much simpler and substantially faster loading. The biggest thing about search engines and news tracking services and how you get archived and treated, page load speed is very, very high up the list. It used to be about SEO was more important. Page load speed is far more important because people are impatient. And Google wants to know that if they put you top of the search results and someone clicks on that link, it's going to load very, very quickly because they know if it doesn't, that person's going to leave.
Yeah.
So our page load speed, I can't remember how much it was increased by, but it's substantially better than it was on the older sites. And that's really down to a new content management system. So that's really big to us. I think the other thing we look at a lot is when you're producing as much content as we do, how do you get more syndication of your content? So how do you get it further? It's an ongoing process. So we have someone dedicated just to that.
Now, okay, I want to dig into that. So is the challenge, because you're a paid for service, that if you're asking for syndication partners, they're basically saying, well, I'm helping a competitor? Or is there a way to massage that relationship with third-party or syndication sites? Because I assume you want to work with other financial news sources because they have the audience. Is there a way to create relationships that are mutually beneficial that way?
There are, but I would say with the big financial houses where we have gotten syndication, what we've learned is that we look like a competitor because we are writing on financial news, and technically that's competing against them. And it takes a while, but eventually they get to the thought process of like, hang on a minute, they're actually writing on a whole bunch of stuff that we never get to every day.
That's right.
So they're actually helping us fill a void in our own platform, and they get their head around the fact that we are paid. So when you're paid for media, the immediate reaction is, well, you're promoting, you're over elaborating companies, prospects, these kind of things. So that's why we write the way we write. That's why we write down the line in a Bloomberg style, because that helps diffuse that debate. I think the other thing we've been very fortunate over the years is that Google News and these types of groups have come out and have tried to standardize that news search engine, and that's helped us standardize our content. And through syndicating with groups like that, you open other doors. So we syndicate with around 50 groups now globally.
Oh, wow.
And some of those groups absolutely would still say you're a competitor, but we'll take your content.
Well, because there is a demand for content, and I think that what you're doing is smart in the sense that no one else is producing it. And maybe one thing that wasn't clear in our discussion was you do focus on small micro cap companies.
We do.
You're not writing a lot of coverage on, say, Microsoft or Apple or Google because every other publication in the world is trying to write that ink.
Absolutely, and they'll beat us to it every time. I'm never going to beat a major financial news house to a story on but I always joke about this. One of the jokes I make is that if you look at like look at Market Watch, Bloomberg, CNBC, MSNBC, if Uber puts out their results after market, they've written on it 50 times before I've even had a chance to look at it.
Yeah.
So why am I going to try to compete against that? There are lots and lots and lots of smaller companies, and small mid-cap is a very large category. We're talking 10,000 plus companies globally.
Yeah.
And lots of those companies are putting out news after market that's material as well, and they won't even get a single sentence written on them by those major houses who are battling for page impressions and eyeballs about Uber and Apple and those types of groups.
Yeah, no. You want sort of the mass consumption of readers, those looking for the obvious headlines, and then you can come in longer tail, as you said.
Yeah.
Now, okay, let's focus on the issuers and the companies for a minute. Without giving too direct of a sales pitch, I mean, what are some of these companies doing that you, when you see it from a news flow perspective, you just go, oh man, like, what are the common mistakes that these companies are making? Not saying with or without using your service, but you just kind of see some habits or lack of habits that really hurt companies even coming out of the gate.
Well, I'd strongly advise any cannabis company not to lose their Health Canada license when they go public.
That's a good one. Yeah.
That's definitely not good news. I think it's
I meant from like a media production standpoint, or a media, I should say, creation standpoint.
I think okay. Here's this is another kind of one of these. I use this a lot. I always say to CEOs of companies when they say how do you utilize our service, and how do you just generally maintain a good relationship with the market and keep interest in your story. And I'm like, it's a marathon, not a sprint. And when you go public, you just started the marathon. That is not the end of the marathon. Your life's going to get more difficult. You now have to spend more time, and your CEO, you're already juggling a lot of balls, and now you have to juggle the shareholder ball as well, and marketing your company and keeping your company fresh. It's war out there. You're competing against those other 10,000 small companies for attention. So I think the biggest, mistake we see from companies is there's this massive buildup to the go public, and as soon as they go public, they kind of take their eye off the ball on that, and that can really come back to bite you very, very quickly. Because as soon as you drop below your IPO price, you're in a major uphill battle, because the kind of attitude towards your company changes overnight, and it's now it's below IPO. It almost encourages more selling into the market, because people are like, oh, hang on a minute, what's going on with this company? So I think a lot of CEOs and just generally a lot of boards of publicly listed companies, when they finally get to the market, don't quite get the balance right on what do I need to continue doing to maintain my visibility and maintain my share price above that IPO price. I think that's extremely important. Once you fall below that, it can get a lot harder. I think a lot of CEOs, and I understand why, I think it's not want to criticize them and say that they're doing something wrong. I think it's the nature of how the market works. You put so much effort into that going public. You're doing road shows. You're raising the capital. You finally get public. Now you want to go deploy that capital and grow your company. And next thing you know, your share price is dropping. You're dropping. Suddenly you're forced to come back. And it's almost a bit of a panic attack. And then they kind of just throw things to try and stop that. And they should have had a plan before they went public to help maintain that visibility and help maintain interest in the story so they don't go through that. And I think that's a
it's hard to play catch up in the market. I agree with you, and it requires a proactive approach.
It does.
Sorry. I promise you this is not a paid for. No. Well, Ian, maybe just to wrap up, can you tell us where people should be visiting and interacting with your content? Where do you want to promote?
Absolutely. I mean, proactiveinvestors.com is the easiest site to go to. We do have an app as well, which you can download onto your phone. Other than that, I mean, we have another business called Brighter IR. So I always like to plug Brighter IR whenever I get a chance. And they are in the corporate website solutions industry. So they are building websites for companies going public. They manage around 350 websites right now, growing very quickly. So always good to see. Go visit brighter.ir.com for any company looking for either an upgrade to the current website or is going public and need a brand new brand, new website, all that kind of
Gotcha. Actually, I'm going to ask a quick bonus question.
Sure.
Why did you guys create an app?
I think we created the app. We think there's a position there on the rich media side more than anything.
Okay.
And I think you can, there is in our general kind of ambitions, we do see that because we have 6 studios producing video, there is an opportunity to potentially go to a live TV type of model eventually, and I think the app will play part of that.
Okay. All right. Well, stay tuned, folks. Proactive investors, not just stopping at, bombarding you with news flow, but maybe actually having something that's real-time live, and that would be really cool too. But Ian, I want to thank you. Thanks for dropping in. I know that you have a flight to catch later this afternoon. Again, if you're watching, please subscribe on YouTube. We're CSE TV. Twice a week, we're putting out these interviews. We're also doing other on-the-street content and also market opens. So if you're watching our YouTube channel, you're going to see a lot of great content in the small to micro cap space. And also, if you're listening, Spotify, SoundCloud, Google, Apple, you name it, we've got podcasts. You want them, download and subscribe. And again, Ian, thank you so much for joining us today. And with that, I'm James from the CSE, and have a great day.
Thanks for having me.
Hi, it's Grace from the CSC reminding you to make sure to follow us on social media for the latest updates on our listed companies as well as new listing alerts. For more in-depth content, be sure to pick up our free quarterly magazine, Public Entrepreneur, available online at thecsc.com.